After yesterday's big down day, it seems like the market is rebounding, at least at the time of recording this video, and nobody's for sure if the bottom is in or not, but we are seeing some pretty impressive bounce back on the stock market. Nvidia's up, Microsoft is up, Broadcom, Eli Lilly, Meta. You're seeing a lot of companies come out really green here today, and I want to talk about, after the dust settles, is this move to the downside over, or is there more room, more pain to come for the stock market? In this video, we'll also be discussing gold, the US dollar, and really importantly, the Japanese yen. And at the end of this video, stay tuned because I'm going to be talking about my personal financial plan going into the rest of this year. And if this stock market does continue to sell off, what I'm going to do about it. And that should be an interesting component of the video, a little bit of psychology for trading, as well as just, my personal opinions and approach on how I'm dealing with this market. So the S&P 500 yesterday dropped off the face of the earth and then came roaring back. And today we actually see it up on the day. So I wanted to discuss a little bit of this. Where is this market headed? Do we have room here? And is this just one big fake out before we crash through the lows? Well, as I mentioned just a second ago, at the end of this video, I'll give you my full context of how I'm treating this. But long story short is I'm looking for bigger discounts if they happen in the markets to actually add to my personal trading portfolio. I have cash on the sidelines that I'm ready to deposit if the market gives me better deals. So I'm open to the idea of the markets going lower, but personally, I think that there's a good shot that the low may be in on the S&P 500 and the NASDAQ. Now, although we didn't quite make it to the 200-day moving average on the S&P 500, the NASDAQ did tag that 200-day moving average and actually held it as strong support. We also saw a big support level hold around 17,250, 17,300 on the NAS 100 index. And again, now that index is bouncing about 1%. We also have the Russell up 1.4, the S&P 500 up 1.1. And I personally took a position yesterday on the semiconductor ETF SMH after it tagged its 200-day moving average, hit support, and looks like a good buying opportunity for me personally. These are companies like Nvidia and AMD and Broadcom, the chip companies that provide the tech trade with their picks and shovels, if you will. I really like this index for the longer term. The SMH, again, grabs a basket of stocks. And I mentioned that earlier when we looked at the heat map. I was looking at some of the semiconductors, which, again, you get a combination with this SMH of Qualcomm, AMD, Texas Instruments, Micron, Nvidia. Basically all the companies that provide the chips to the global demand for semiconductors. I also picked up a position on the Russell 2000 index, which tagged its 200-day moving average and hit support as well. I entered into the trade. So far, things are bouncing nicely. We'll see if this has lasting room to the upside. And let me be clear about all of these. You might say, well, Nick, what if this thing crashes back towards the lows? It's very possible that this is a bit of a, sucker's rally and you could get stopped out. And I don't shy away from the possibility that I could get stopped out on these positions. They are starting to work out, but that doesn't mean they're going to be massive winners for me. And this is the approach I take to all of my trades. I'm never 100% certain of what's going to happen in the markets. That's a fool's game because the markets are pretty unpredictable. But with educated guessing, we can make educated guesses and manage risk appropriately to make money in the long run. That is all we can do as traders. So I'm buying this dip at support, and if it breaks, perhaps on bad earnings, or if something changes, I'll get out of these positions and look for better prices. Also, real quick, I just wanted to mention that if you're looking for a better brokerage and you're outside of the US, I would encourage you to check out 8cap, which is linked down below in the description of this video, along with some of the other brokers that we recommend. If you're in the US or outside of the US, if you're looking to trade CFDs, equities, ETFs, futures, whatever you're looking to trade, there's several brokerages linked down below in the description. But notably, 8cap allows you to trade directly on tradingview.com, and they have some special sign-up perks available to people who check out my videos. So check out that link, see what's available to you, and now back to the video. Now I want to talk about some of the catalysts that, people were very concerned about, and why I personally think that the calls for recession and global terror that happened yesterday were a little bit overstated. So I'm taking a look at the Japanese yen against the US dollar, which has fallen off a cliff recently. And as we discussed on the live stream today, we talked about how when we look at the commitment of traders data tracking institutional money flow, we saw huge short coverings on the Japanese yen. This would suggest that there's a bit of a short squeeze going on the Japanese yen. The whole world was very short on the Japanese yen, and without getting into the weeds with it, the long story short is the Japanese yen offers a low interest rate. Many investors borrow in Japanese yen to go invest in stocks, bonds, crypto, businesses, so on and so forth. And when the world is fearful of a recession, they unwind that trade, meaning they owe back that yen that they borrowed, so they have to buy the yen back or cover their shorts or borrow positions in order to buy back the yen. We see that apparent in the Edgefinder's commitment of traders data showing the weekly filing for Japanese yen buying was very aggressive, but not because people were going long yen contracts. They were, but they were massively covering short contracts, which is also buying, but it's more specifically short covering buying, which is different than just outright buying. I hope that makes sense. By the way, if you want access to the Edgefinder, there's a link down below in the description where you can get 30 days access to this tool, which is something I use in all my videos to take a more comprehensive view of macroeconomic data in the financial markets. And of course, you can also access the commitment of traders data within this report. So don't miss out. There is a link down below in the description where you can find more information about the Edgefinder or get a trial for 30 days if that's something you're interested. You can also chat with a rep during work hours, and someone from my team can answer any questions you have about the tool or give you discounts and information about purchasing the product if you're interested in getting access. Next up, I want to talk about this dip that we're seeing in gold, and similar to my theory on the stock market, which you'll hear more about my general strategy at the end of this video, the gold market sell-off is something that I look at with opportunistic eyes, if you will. If we see a bigger discount in the gold market, I am interested in picking up gold for less dollars than they currently are. Right now, it costs you about $2,400 to get 1 ounce of gold if you're talking physical gold. But because we're trading it on the paper markets, same kind of concept applies. We could potentially see gold go lower, which I actually would love to see in order for me to possibly get a long position going at a better price. And if we do see this level hold, then great, I can make some money on that. But ideally, well, not ideally, but if that doesn't work, I'm happy to also try again around that 2,300 level that we've got marked up on the chart, which has been recently a very strong level of buying for gold. Now, what if I'm completely wrong, Nick? What if you are just so silly and you buy here and you buy here and both of this just floods through the lows? Then plan B, I guess plan C, here's A, B, and C. C is to recalibrate and wait for a better buying opportunity, whether higher lows start to form, higher highs. And notably, I'm not going to lose the farm on plan A and plan B. This is the difference I think new traders and professional traders get. Professional traders get, new traders don't, which is if I'm dead wrong in case A and B, I'm not going to be hurting, right? I'm taking small positions per trade. And if it doesn't work out, I try again creatively. I wait for the next setup and I manage risk appropriately, small risk per trade. And if something really drastic changes, then perhaps I even start looking for short opportunities if something on the economic data flips. But today I also did a full breakdown on my gold analysis view of the Edgefinder's data scanner on gold. So we'll play that clip from the live stream, followed by my clip from the live stream today of me discussing my plan for if we see a bigger sell-off in the stock market and why I actually welcome that opportunity. Check this out. This is our full feature list. So this is all the different economic data points that are being studied by the Edgefinder's internal algorithm. So let's go through this. So commitment of traders data is flat. Why is it a mixed reading for us? Well, I'll show you. Institutional money is very long gold, but in the latest filing, the weekly change was very bearish. So let's go ahead and call that neutral. So that's why the score is 0. And hopefully by doing these breakdowns, you'll understand kind of how this tool functions, what the purpose behind it is. So retail sentiment works against us because retail sentiment is showing retail traders are very long gold right now. So that's not necessarily a great signal. That gives us a -1. Why? Because retail traders, unfortunately, they're very emotional. They're trading with, they're fighting trends aggressively. So this move lower, retail traders are piling into a long. So that could indicate maybe we have some short-term lower prices to come for gold. Let's keep going. Seasonality. This month on a 10-year historical average performance is a gain of 0.92%. So that's telling you that if August subscribes to standard seasonality, we would expect a modest gain for gold on the month. Let's keep going. Trend to the upside. We saw that on the daily chart. Overall upward trend. GDP. Why is GDP giving us a bearish reading? Well, let's go take a look. Under economic growth, let's go to what the forecast was. Forecast was for 2% GDP growth for the US. We actually saw 2.8. That's better than expected. 0.8% beat is not good for gold, because remember, gold thrives in an environment where the economy is falling apart and people are terrified. So GDP beat expectations. So that gives us a -1 on gold. But let's keep going. Manufacturing PMI came in really light. So manufacturing PMI came in lighter than expected. And then if we take a look at, this seems wrong. I need to check this. This is actually incorrect. Our services PMI forecast was not 53.8. I think it was lower than that. Or maybe the latest data point hasn't updated. This is wrong. This actually should be services beat expectations. So this should actually be a -1 for gold. So that is an issue on our end. We will get that sorted out. Retail sales. Retail sales is, of course, like consumer spending sort of ideas. It came in higher than expected. That is a bearish signal for gold. Now what we'll see is there's a lot of positive signals for gold. Let's take a look at these. Inflation. Well, inflation is giving us a positive reading because inflation has been coming down relative to forecasts. Again, inflation coming down is showing that the Fed is likely to cut interest rates aggressively. And recently that's become very apparent. So that's bullish for gold. So we get 2 points there. Finally, we've got employment data and interest rates. Unemployment rate went up by a surprise of 0.2%. That is very bullish for gold. Then you take a look at the labor data statistics, and we missed jobs by a good margin, gives us another point. So finally, interest rates are coming down on the 2-year treasury yield. We see them trending lower. It gives us another point. And a lot of people are going to get here's the other thing. A lot of people will make the mistake of getting uber bearish and start like betting heavily that the market's going to keep going lower. And it could, if you're somebody who's betting against gold, there is possibly more room for this thing to trend lower, make a move down to like 2360. In fact, I think it's probably going to go back and retest this. We'll see. And if that happens, there might be a nice little opportunity to pick up some gold at better prices. And if it breaks that level, again, I mentioned this earlier, 2000 starts to look really good too. I have a bullish reading on gold for currently, as we just broke down on the Edge Finder. I prefer the long side at this current, position with such a good score. If this flips bearish, then I may start to get short on gold. But for now, if we're holding up a decent reading on the Edge Finder for gold and we're getting a dip, very, very interesting. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.